Welcome, friends, to the 25th episode on the Educative series. This is Ramkumar. I will be talking about the IPO or the prospectus or RHP, that is Red Herring Prospectus, of the company Savy, Infra and Logistics Limited. In this episode, this is a summarization of the IPO. This company will be listed in the SME segment of NSE. It is open from 21st July to 23rd July 2025. The RTA for this IPO is Ma Sheetala Securities Private Limited. I am currently not registered with any regulator in India like RBI, SEBI, etc. For the rest of the disclaimer, you may look at the screen in front of you. In terms of issue details, the issue size is 58,32,000 shares of rupees 10 each, out of which 2,92,800 shares will be reserved for the market maker. The minimum lot for allotment is 1,200 shares, while for application it is 2,400 shares. Hence, the minimum application amount would be rupees 2,73,600. This is a floating price IPO, where the lower cutoff price is 114 and the upper cutoff price is 120. There is no employee reservation in this IPO. Further, anchor investors are required to invest on 18th of July 2025. Now we'll talk about the company. In brief, the register of the company is based in Gandhinagar, which is in Gujarat. The corporate office is in Mumbai, that is Maharashtra. The lead manager to this issue is Unistone Capital Private Limited, while the market maker for this company for this IPO is Global Worth Securities Limited. The company was founded in 2006. In terms of business, it is in the logistics business, which involves earthwork and foundation related work and excavated materials, solid, hard rock, etc. The company arranges to pick from one location to another location. Mostly the other location is a dumping site or any other site as may be pointed out by the client. This also involves moving ore and other such materials from place A to place B. Majority of the business, as we go along, we will see the percentage in terms of business, is from Gujarat, Maharashtra and Andhra Pradesh, although they are operating in about 12 odd states. In terms of IPO, this is a 100% fresh issue. There is no OFS or offer for sale involved in this. The proceeds of the IPO would be used for working capital and general purpose expenses. The agency which will manage the proceeds or usage of the proceeds of the IPO is Infomerics Valuating and Ratings Limited. As far as the financials are concerned, now we'll talk about the revenue, profit and total assets of the company for the 3 years 22-23, 23-24 and 24-25. If you see, the revenue has increased from 6.19 crore to 283.39 crores. This is a good jump in terms of the revenue increase. At the same time, the profit has increased from 0.64 crores, that is 64 lakhs, to 52.624 crores. This again is a good percentage increase. The total assets at the same time has also increased substantially from 0.34 crores, that is 34 lakhs, to 23.88 crores. So all in all, this company has been doing well in terms of clocking higher revenue, higher profit and a higher amount of total assets. Now whether it is good or bad, we will see as we go along. As far as the EPS calculation is concerned, as is the usual practice, the company has put a weightage of 3 for the EPS of the year 24-25, followed by 2 for 23-24, followed by 1 for 22-23. So if you look at the weighted average of the EPS across these 3 years in question, it comes to rupees 11.08 rupees. If you compare it to the peer group available or listed in the exchanges, the highest EPS for a company is 19.34, while the lowest is 14.08. If you compare that to the EPS of this company as is proposed in the prospectus, it is much higher. The lowest one company being 14 and the highest being 19.34. To that extent, this is this is having a good PE equivalent as we speak. Now we'll talk about the important aspects of debt equity ratio, return on equity in terms of percentage, profit after tax in terms of percentage. Again for these years 22-23, 23-24 and 24-25. Here we have the debt equity moving from 4.86 to ultimately settle at 0.86. Any debt equity ratio less than 1 is good, but it should be lowered further if you want to be safe in terms of not having to service too much of debt. Return on equity percentage is 71.31 in the followed by 176.95%, which settled down at 76. So you can say roughly that this company is having a return of equity of about 75% as per the prospectus, as on the date of the prospectus. In terms of PAT percentage, it is 5.45 followed by 9.71 followed by 8.43. So you can say that profit after tax percentage is 8.43. If you look at the customers, there is a heavy concentration of the customers in terms of concentration risk. So if you look at the top customer for the year 24-25, he contributes to 50% of the total revenue. As far as top 3 customers are concerned, they contribute to 64.54, and if you look at the top 5, it is 74.90. If you look at the statistics, it shows that they have been trying to reduce the weightage of the concentration on top 5, top 3. However, the top 1 customer has continued to rise in terms of the percentage concentration. So to that extent, there is a concentration risk in the business as far as the customers are concerned. If you look at the segment wise revenue breakup, EPC, that is engineering, procurement and construction, gives the maximum percentage in terms of revenue, which is 80.36 for the year 24-25. The logistics is 14.18%, while other businesses which are very small in comparison to these two is 5.46. So the company is heavily reliant on the EPC business, and that has also gone up in the last 3 years. As far as the customers are concerned, the top 1 customer contributes to 46.13%, the top 5 79, and the top 10 90. So this is not very healthy in terms of concentration risk, as the top 10 customers total up to 90.28% of the total. In terms of activities, if you look at operating, investing and financing activities, the company is having cash losses. So operating cash loss for the 24-25 is 17.51. The loss for in investing activities 35 crores. For the financing, it is little bit positive in terms of it being 52. If you look at the cash losses and the cash profit or the positive, it is almost same in 24-25. But however, if they are not able to manage to reduce the losses, cash losses in operating and investing, there could be issues in terms of profitability as we go along. In terms of the business, state-wise business, as we saw in one of the earlier slides, that the top 3 contributors are Maharashtra, Andhra Pradesh, Gujarat. You will find that in the year 2025, about 80% of the business is contributed by these 3 states. To that extent, there is a risk of concentration on these 3 states. The remaining states contribute about 20% of the total business. So the total states, as I mentioned earlier, is about 12 states in which they operate in terms of providing logistical support, etc. Now we'll go into the factors, that is the risks and the strengths of the company. Now the usual risks of changes in the government for the states in which they are having maximum business, that is Maharashtra, Gujarat and Andhra Pradesh. Any policy changes there could create issues in terms of the business. Next is the policy related to environment and other things. Since this company is heavily into moving ore and other such items from location A to location B, there could any changes in the environmental policy could create issues for the company. Regulatorily, now earlier they were only covered under MCA. Now they will be having to follow the LODR rules, the Savy rules and other such activities. So to that extent, there will be regulatory reliance on the regulatory directions. Tax and tariffs, as with true with every company, would affect this company also. The taxes will either positively or negatively affect depending on whether it is high or low, or higher or lower. Tariffs could create issues as and when they are introduced by the states concerned where they are operating in. In terms of litigations, there are not too many litigations against the company or its promoters or promoter group or directors or KMPs. But however, if any litigation goes against the company, to that extent, that much of money will have to be released by the company in favor of the people who have put up the litigation. Infrastructure related movement is the core activity that this company is involved in. As we saw earlier, it is about moving ores and other such infrastructure related material from location A to location B. As far as contracts are concerned, the company is not having any long-term contracts with any of the clients or customers. Similarly, there are no firm commitments also either side. So this could be an issue in terms of stability of business, as they will have to continuously be on their toes to get more business from the same entity or more business from different entities or new entities. Added to this is a narrower customer and client base. As you saw earlier, the top 10 customers contribute to about 80 to 90% of the business, similarly with the client base. So this could be an issue in terms of concentration risk. Another observation is that maximum business is contributed by the west and east zone of the country. So here also there is a concentration risk. So there are two concentration risks. One is the narrow customer and client base. Second is the location of operations, that is west and east zone of the country. The company has taken ISO certification for 9001 and 14001. 9000 being for quality management services and 14001 is for environment management services. As far as working capital requirement is concerned, the company requires huge amount of working capital because they are into a capital intensive business. As we saw earlier, there is a high amount of negative cash flows, as we saw in one of the earlier slides about operating activity, financial activity, and investment activity. The company's registered office, corporate office, and the location offices are all on rental premises. So this is more of a fact statement rather than having any bearing on the working of the company. Yes, there could be little bit of hiccups, but that should be okay because it is not going to overtly affect the working of the company in terms of them not being able to do logistics, etc. Another important thing is the trademark of this company or the logo is not registered. Not registering a logo is an issue which needs to be addressed to by the company, as there could unnecessarily be embroiled into some controversy or the other, with inviting some cases also on themselves by way of somebody else claiming this trademark or this logo as theirs. In terms of non-compliances, company has been seen to be non-compliant with respect to filing of various forms with ROC, that is register of companies. But going forward, I think the company will be with adequate number of people because they are taking the IPO money also for administrative expenses. They should be able to tide over this issue. Another important factor is that the business that the company is in is fragmented. That means there could be local players who may be undercoating them, who may be able to take more business. To that extent, this business is may become highly competitive. Currently, the company is claiming that they have not taken any insurance on any of the activities, either on their office or on the logistical activity that they do. This could create an issue in terms of accidents or any other untoward incident. So this is something that people should note. We have summarized the RHP, that is red ink prospectus, and placed it for you to peruse. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Should you have any doubts, queries or suggestions, please reach out to me at ramkbharosay@gmail.com. Thanks.